In the first half of the year, strategists were calling for the rally to broaden outside of big tech and into the rest of the market. And lately, it seems to finally be happening. To discuss the transition that we've been seeing from growth to value stocks, we've got market domination co-anchor and everybody's favorite Julie Hyman.
Oh, thanks so much, Brad. And I wrote about this in this morning's Morning Brief newsletter from Yahoo Finance. Indeed, we have seen this rally that's gone on this year, up 19% for the S&P 500, but there has been this debate. Wasn't this just dragged higher by large cap tech, which accounts for so much of the index? One way you can measure it is by looking at the S&P equal weight index, which takes away that market cap weighting. We've seen that rise by less than the S&P 500, 12 or so percent to the 19% for the S&P 500. But you have seen this acceleration over the last quarter that ended yesterday. And similarly, we have seen that happen with value versus growth. Now, first of all, quick definitions here. Growth, well, that's sort of self-explanatory, right? It is higher growers. It is those big cap tech stocks who also tend to have higher valuations, higher price to earnings ratios versus value, which some investors say, well, they're trading below their intrinsic value. They're not as buzzy. They're not as sexy. So what we've seen here is that the Russell 1000 growth index here, it peaked back in July, hasn't regained that. Last quarter, we saw an increase here of about 2%. But what was interesting is that value stocks were gaining some steam here. Here's the Russell 1000 value index, and you can see that moving up last quarter. While growth was up about 2%, this index was up about 8%. So we're starting to see it gain some steam here. But it hasn't been a straight line, most definitely. We talked to Lori Calvasina of RBC. She's head of U.S. equity strategy there yesterday. And she talked about this sort of messy transition, as she has called it.
Growth is off its highs relative to value. You just haven't quite been able to have this leadership handoff from the mega cap growth names to the rest of the market on earnings leadership. And I think that's why it just keeps going back and forth and back and forth. It's fading enough to make people nervous, but not fading enough to really make it clear that it's time to hand off to a new leader.
So you have had this sort of back and forth here. She gave some reasons that she thought growth particularly could be challenged going forward. She said, first of all, a lot of people are long growth. There is long positioning. And she said when it tends to be that's a crowded trade, that many people are long, you tend to see tech back off. She talked about valuation as well. When it gets to the level where it has been, then it tends to back off. And finally, we're seeing earnings growth that is actually decelerating for many of these companies, and so that might be another catalyst. Another way to slice and dice it, and this is from a recent report that she put out, these are ratios of large cap value to large cap growth to large cap value. So when the chart is going higher, it means growth is outperforming. When it's going lower, it means value is outperforming. Large caps, small caps. Now, small caps have kind of puttered along here. We haven't really seen growth or value take the lead. We've seen growth, as we talked about, really lead the gains over the past couple of years. And then we see that sort of fits and starts that she talks about, that messy transition. So we'll see where it goes from here. Certainly, there are a lot of value investors who have been waiting for value to come to the fore here. They've been waiting a long time because growth has really been dominating. Brad?
They certainly have. Julie Hyman, thanks so much for breaking it down. Appreciate it. And you can catch Market Domination with Julie Hyman and Josh Lipton, 3 p.m. Eastern Time.